You're welcome back. Well, let's talk about your money now. The Nigeria Deposit Insurance Corporation has announced a revision of the maximum deposit insurance coverage for banks operating within the country. And you know, banks hold your money. So let's find out how this concerns you. Let's look at the numbers. Or before I look at the numbers, let's introduce our guests that is going to discuss this. Professor Segun Ajibola, former president and chairman of Council, Chartered Institute of Bankers of Nigeria. So Professor Ajibola would join us now to tell us how this is going to affect our monies and what this is trying to achieve. Good morning, Prof.
Good morning.
All right, so we see that there's been a revision by the NDIC, and deposit money banks now have to do, they used to do 500 million to now 5 million, microfinance banks 200 million, and then primary mortgage from 500 to 2 million, mobile money operators 500,000 used to be to now 5 million per subscriber. So tell us the implication of this first. Is this because of the recapitalization coming up in the banking sector?
If we dimension what NDIC, Nigeria Deposit Insurance Corporation, stands for, we can summarize this in just 3 specific areas. One is insurance coverage, which is this. The second is to help to stabilize the banking system. They do that through periodic examination, periodic visit, and some remedial actions, which at times may even involve some elements of a distress resolution. Then the third leg is what we refer to as the undertaker role of NDIC. That is when a financial institution, the situation has gone beyond redemption. Then there is liquidation, there is realization of assets, there is distribution of the proceeds to all stakeholders in the order in which the law permits them. Now, when we look at this role, which is that of insurance cover, as we know, to have an insurance cover gives you some confidence. To have an insurance cover means if anything happens, due to no fault of yours, then you still have some things that will come to you in terms of what you have invested in a system. So for NDIC, the role now is to say, let's look at what goes immediately to our depositors in case a bank is liquidated. Some of us that are risk management professionals will be wondering for long. Somebody has his money, whatever amount, in a bank. The bank is liquidated. Then you are talking about 500,000 from used to be 200,000. It's like nothing to maybe an investor that has stake maybe his life savings in millions to a bank. Now with the revision to 5 million, 2 million, 5 million, it gives some confidence to depositors. And the depositors can now say, because there is a maxim in investment, you first of all look at where you can protect your principal, not the interest. So here now, it's not just the principal that is being protected, even principal plus accumulated interest. Because in case of liquidation, what matters to NDIC is the balance on your account, your deposit account, as at the date of liquidation. Okay, so they are saying they can cover up to 5 million of that. Okay. So it gives confidence to depositors.
Okay, Prof, let's relate this to the recapitalization. I think it's kind of obvious. I mean, some analysts have said we have about 25 banks now, I believe. And depositors have said it might end up to about 11. We know what happened the last time there was recapitalization. So, and a lot of people who are watching this program, they have their money in different banks, banks that are on different tiers. What happens with the NDIC now, talking about insurance and all of that? And I know they did make some changes to the percentage of coverage of people's money.
Sure.
So if you help us enlighten that. And then what happens? Perhaps a bank is merging, cannot make it during the recapitalization. Help us to paint the picture. I have, for instance, 5 million naira in a bank that didn't make through. Then what happens to me?
Yeah, if we look at what has been happening, if in the 2005 recapitalization exercise, only very few banks out of the 89 banks in Nigeria then had that problem of not being able to migrate to the new recapitalized banks. And as at that point, the interest of depositors was fully covered. No depositors were allowed to lose their deposits. So we've done fairly well. The regulatory authorities have done fairly well in protecting the interest of the depositors. Now, when it comes to the coming recapitalization, we still hope that there will be no bank that will find itself in a liquidation scenario where NDIC has to come to now apply these new rates. But generally, with this policy, about 98% of all bank depositors in Nigeria will be covered in case anything happens. So that critical mass of the people or bank customers, they are now being protected, which means you have nothing to fear in case a bank goes into liquidation. You will get whatever is the balance in your deposit account fully. That is the 98%. But the critical mass of about 2%, because it's 80-20 rule, the 20% of bank depositors having the 80% of the balances in the depositors' account. So that is, in terms of number, in terms of value, that 20%, which is now the 22% of all depositors, own so much in bank deposits. So they will help because banks need that deposit from that 2% to continue in business. They will help to promote and insist on good corporate governance in these banks. They will strengthen competition in the system. They will ensure good practices. So there is need for that 2% in terms of value. But the critical mass of the people as bank customers, 98% of them will be covered in case anything goes wrong from this new dimension of 500,000 to 5 million, 200,000 to 2 million. Now, when we talk about the coming recapitalization exercise, well, what the recapitalization is expected to achieve is to even strengthen the banking system, ensure that the banks become stronger, more capable, raise their capacity, so we don't even have any reason to fear the likelihood of a liquidation scenario under the new recapitalization exercise. But I believe that this step is being taken, and rightly too, by NDIC to help stabilize the system, to give confidence to bank customers, that especially depositors that are maybe becoming agitated given the state of the economy. So recapitalization or no recapitalization, this exercise has been long overdue.
Okay,
Because we've
but
been looking at the figures.
Prof, I mean, you know now the fintechs are becoming popular, the mobile banks, you know, the one you just use on your phone, you get on. And I've seen some of them, they tell you they are covered by the NDIC. So they are captured in this because whenever there's any news, like now the CBN is warning them, or you can't do crypto transaction, which it's a directive that has been given to the deposit banks a while ago, even before now. But Nigerians are yet to build that full confidence in the fintechs. Tell us the position of fintechs and the NDIC.
Well, you can see that mobile money operators, they are covered here. You see, in financial management and in financial regulation, what is important, number one, is the institution a purveyor of credit? In other words, they can take money, they can lend money. That's number one. Number two, is there a license for such an institution to operate in an environment like Nigeria? If so, if you leave them unregulated, you will be doing that at the expense of innocent Nigerians that embrace this kind of services. That is why they are now being offered. But Nigerians too should be wary of going after unlicensed financial institutions. We've heard the story of MMM, we have the story of all this. Banks are managers of liabilities because about 87.5% of the monies available to them to do business, they belong to the depositors. So that is why regulators should always protect the interest of the helpless depositors who innocently walk into these financial institutions to transfer business. So that is what is coming out as something so encouraging about this new policy, new regulation about deposit corporate coming from NDIC.
All right, Prof. we're almost, in fact, we're out of time. But what is the process of getting refunded as a customer if you feel, for instance, you are using one of the, let's say, the fintechs, for instance, and suddenly they go off, you can't access them, you have some money there, and they're covered by NDIC. How do you start as a consumer?
No, immediately it happens. NDIC will call on all depositors to come forward. Proof that you brought money to this institution. The moment that proof is confirmed by officials of NDIC, it is what is payable to you immediately. The 5 million, the 2 million we are talking about is payable immediately. If NDIC is now unable to cover the total that is outstanding, when they start realizing the assets of such an institution, they start paying you instrumentally. But the figures we are talking about here, they are payable immediately in case of a liquidation scenario.
All right.
So that is why the interests of depositors are now covered. 98% in terms of a number of customers, and about 25% in terms of value of deposits in Nigerian banks.
All right, Prof, thank you so much for that clarification. I know a lot of Nigerians who heave a sigh of relief when they think their money at least is covered. Thank you for your time. Professor Segun Ajibola is the former chairman of CIBN. Thank you.
Thank you very much.
All right, now it's almost time to head back to Sunrise Daily Studios. We'll just tell you some market numbers as it closed yesterday. The market was